We are expecting, I can see people coming in for the other sessions. Here comes Dusan Stojevic, who kicked us off yesterday morning. Only fitting he should be in the room for the close. We love it. Ladies and gentlemen, we are going to be having our plenary session where the chairs of some of the various streams that we had earlier on today are going to be joining us to have a little bit of a wrap up and send us off back into the world. Remember, the WBAF doesn't just happen for a few days here in Istanbul, but the high commissioners are out there linking people, contributing to the message, and growing the ecosystem all around the world. Our session is going to be moderated by the chair of the WBAF himself. His last chance to take the stage at this is, he is, of course, the chairman, Baybars Altuntas, who's going to be joining us on stage. Baybars, here he comes. He is going to be joined on stage by Renata, Brkic, the founder of Feelsgood Social Impact Investment Fund from Croatia. She's going to be coming up on stage momentarily as well. Paolo, Doany, as soon as we can track him down, his last time on stage, Chief Executive Officer from Turk Telekom, is on his way, as well as he's coming in just a moment, as well as Paolo Sironi, FinTech thought leader from IBM Watson Financial Services, who was leading our FinTech session. While we round up our speakers, I will dance, I could sing, I could take questions about Hong Kong and the angel investment opportunities there, or just what's going on in China. Whatever you got. Anybody interested? I could tell you stories about Chinese New Year. It's the year of the dog. I had speakers, then I didn't have speakers. I'm sure they're on their way up here momentarily. All right, ladies and gentlemen. I do have some good news. I will let you know, I think some of you have already put it into your calendars, but if you haven't yet, get your phones out and turn to February of 2019. We have dates for next year's WBAF, which will be right here in Istanbul. Looking forward to that already. I believe it's February 24th. Things are going to be in action. There we go, as we come together. So people, please make sure you've got that in your calendars and ready for action. Baybars Altuntas, here we go. Here comes Renata, ready to give the first report on her session. Thank you very much, Renata. And we will have your compatriots joining you soon. Baybars, cheers.
Ladies and gentlemen, now a very tough agenda is about to be accomplished with the contributions of our great speakers, startups, fund managers, angel investors, high commissioners, and you. Thanks so much for joining us this year. This year witnessed very important new developments, not only for the organization itself, but also for the World Business Angels Investment Forum's future mission. Today, a very interesting and very exciting message I received from the Treasury Department of Turkey. And I would like to read this message because I read this message in the lunch debate, dear Paul, in the lunch debate with the Deputy Prime Minister of Turkey. You know, G20 is one of the most, maybe the most important economic platform to drive the future of economy of the world. Now I am very pleased to read the abstract as I am asked to read, in case I will read with this exactly with the same words. Now, this is what I'm ordered to read. It is a great pleasure and honor for me to announce that the World Business Angels Investment Forum became an affiliated partner of the G20 Global Partnership for Financial Inclusion, chaired by Her Excellencies Queen Maxima of the Netherlands. Its participation is approved by the GPFI Troika for a validation period of 3 years linked to the Financial Inclusion Action Plan. This means, thank you. This means From now on, WBAF is the 4th global partner of G20, and now this gives a great opportunity to WBAF advocate the importance of access to finance for startups and for angel investors. Dear participants, this is not a startup event. This is an investors event. So we don't enjoy, as a matter of fact, seeing startups in the Congress room. We enjoy them seeing in the pitching area because issues, topics are different than their agenda we talk here. Our agenda, as a matter of fact, also includes access to finance, but not access to finance for startups, access to finance for angel investors. Why? Because, okay, as an angel investor, I invest in a startup. Why do I make these investments? With an expectation of 5 to 7 years, I have to get this money back. Is it important an angel investor to get this money back? It is important. In order to create a sustainable economy and in order to reinvest in new startups and create more jobs and more wealth for the society, yes, I have to get it back. So the second, third, or fourth round investments are very important for angel investors because all of us know that at the end of the first 24 months, these startups we invested will come back to us and will say, money ended. So the new ticket, please. This is what we are going to hear. So this platform is important to connect angel investors with also private equity funds, with wealth management institutions, with IPO systems, etc. Next year, our board decided to run the Congress with the connecting angel investors with private equity funds topic. So next year, we will see more private equity fund managers in this room. So I think we now have to listen the outputs and some briefs of what happened in other summits. Unfortunately, our other summit chairman, they are on the way to their airport. Paolo Sironi will not be able to join us, but I will summarize his part. We made a short meeting, and let's start from Renata. Renata, what happened in the Impact Investment Summit today?
First of all, First of all, I'm grateful that we have put the impact investment and that word impact on the agenda of the World Business Angels Forum. Demand was high, and we were happy to have a full room almost the whole day. The expected outcome in the morning was to make people understand that impact investing is not philanthropy, and I think everybody understands that now, and I invite everybody to spread that message and to educate about it. The main conclusion is that impact investment, of course, is perceived by not only by angel investors, but also by professional investors, like something that has to do with the philanthropy, with the charity, and something that doesn't yield a return. On the contrary, impact investments are the investments for people, and they actually should be for all of us, for those who want something little more than just a pure boring money return. And this is all about this doing goods. So the main message at the end of the summit is that education is needed, and that, like in the education of children, there is that beautiful saying, no child left behind. let us continue working on it, that no angel investor, no institutional investor is left behind in the education to have that consciousness of using and investing the money, not only for money, but also for money plus the good thing. I must say that the two most vivant topics was the presentation of the European Investment Fund, where the fund manager Cyril has explained the toolkit and the models on how the EIB and the EIF are co-investing with angel investors, with impact venture funds, and with impact bonds. So this was a very interesting discussion, and this is a very valuable thing that the European Union has reached a political decision on that is pushing the impact investing and also the educating the traditional investment community about the impact investing. And the other one was on the blockchain technologies, how the technology can help impact investing and the projects and social economies, and this was very interesting. We had the top-notch blockchainers in the room, and also the impact investors and government officials, and actually they were on the spot giving the examples and the good practices, but also brainstorming new models on how to use the blockchain technology in controlling the past and proving the track record and ensuring security and minimizing the risk. So these were the two great ones.
Yes. Dear Paul Bey, CEOpreneurship Summit. First, do you believe in CEOpreneurship? Tell the truth. Can a CEO become an entrepreneur? Because you are a legendary name in Turkey, CEO of Turk Telekom, and also a legendary name in angel investment, invested in 22 startups. Even nobody knew what angel investment was. So do you think CEOs can become entrepreneur or not?
I think anybody can become, to start with, you know. I mean, frankly, it's not a question of, that's why CEOs, I was speaking to earlier, that this is about executives of companies that can add value to angel investments, because angel investors are givers, they are not takers. So obviously you may get a return, but you're doing it not because there's a straightforward return calculation that you are making, because it takes a lot more than you are giving. Let's put it that way. And even if you are getting a return, the effort that it takes, you are even not calculating the value of that. You're just saying, I'll give you my knowledge, my network, etc. I'll give money, and then most of them fail in any case. And then if you go to the next level, meaning early stage, still you have very high failure rates. And then beyond that, you get into, that's why I was a bit surprised that you introduced private equity into the equation. That's why if you categorize people, the most likable are the angels, the least likable are private equity. Yes. And I'm being very polite from what I think. Of course, that's my personal opinion. So that's where you have the maximum greed. So when they invest, they're looking for a low risk, but still they want a manageable return. And I don't think that those life cycles exist anymore, frankly. So the importance of angel investment even to companies, not just to CEOs. That's why I was telling you we need to bully CEOs while they are CEOs, to say, convince your companies to provide, like Telekom is doing now, for example, their own accelerator program. They did it themselves before I returned to the company. I'm very proud of what they have done. And they have had some success in that, meaning some of the ones that they provided support to in the accelerator program have managed to raise funding as a first round, beyond the support from Turk Telekom. Of course, Turk Telekom has the right to then invest and so on, and that is one method of support, while a CEO can do it while working in a company. The amount of money it takes is not that much. It's very minimal, and the value can be very, very high. So while in your job and you have some authority, this is one way you can do good. And do good for your company, and also do good for, for the economy in general. And of course, you can be selective what you do. You can make it in activities somehow, let's say, related to a fringe of an area you want to grow your business in. So that is, I think, kind of like the first thing to do is use them while they are still in position. And the assumption of what we can do with them after they leave their jobs and to convince them to use some of their money and their time, I'm more skeptical about what value you get from doing that. But certainly I offer to bully them with you, bully them into having more money into the equation, because I think that what will happen for most economies now, because of the life cycle of anything, is shortening, so that the importance of, let me say, research and development, as you saw Deputy Prime Minister talk about, or angel investments. So for me, that's kind of like the same type of risk. The return on R&D requires a very long timeline and money. It's both. You need money and you need time. And again, most of that doesn't work. But if you don't do it, then you're going to be running in the second grade of economic development. So I don't want to overinflate the roles of CEOs, actually, frankly speaking, because a CEO is an employee just like any other employee. He has a bigger job than the others, and his job really doesn't entail anything to do with building up startups, etc., unless that is the business of that particular entity.
Yes.
So it's very dangerous to divert a CEO.
Dear Paul Bey, this morning we announced the Global CEO Alliance Club. I think we have to mention a little bit about it again. Dear ladies and gentlemen, Paul Doany is going to chair the Global CEO Alliance Club. Thank you very much for accepting this important task, dear Paul Bey, because I think this club is really going to serve to the mission of expanding the angel investment market size in the world. Why? Because most CEOs are going to have time to make mentorship in the future after they are retired. They will have a good financial package, and they will have know-how and network. This is more important than the finance they put. In that case, if they learn how to invest in startups, if they learn how to launch a business, yes, he is the CEO of a $200 million company, but he doesn't know how to launch a business. And let's not forget that we are trying to bring the CEO of a $100 million company to the same page with the CEO of a $50,000 startup. So it is not something easy. So our model here is, as WBAF, we have just launched this club. It is participation is free, and not just the CEOs, board members, the vice presidents, etc. And in this club, we will invite CEOs to become silent investors of the CEO network of WBA, because we are going to set up an CEO business angel network. And we will invite them to put $2,000, $3,000 and become silent investor and learn how term sheet is prepared with startups, learn how to make due diligence, learn how to make the company valuation. Ladies and gentlemen, let's confess. If you are registered for an investment course full year, it doesn't cost less than $20,000. Here you will learn it with $2,000 or $3,000. So when you are retired, you will be ready to invest your $50,000, $10,000 or whatever personally or as a member of the group. It is something you will decide. But until you are retired, you will have a great know-how about angel investment. I think this is an important output of the CEOpreneurship Summit today. We are not just talking here, but we are implementing what we talk about. Yesterday, you know, we announced the $200 million fund for SMEs. It is something related with scale-ups, not startups, because we should have a company on the table. And this company should be profitable, and it should have an Excel sheet to show us what happened in the last 3 years. It is another story, but this story is something different. So, dear Paul Bey, what did you talk today, and what are the messages you want to convey to the audience from the summit?
One of the ideas, one of the ideas that I heard that I liked very much, especially for this SME part, is building a vehicle under which a multiple of companies can be jointly or listed. I mean, so you build a vehicle that owns these entities, and then you list it, and then you start making it bigger by obviously these companies doing better and adding more companies into this structure, because this provides for investors, if you like, more liquid value or measurable value in any case, because you have a market value, and then you have obviously the ability to trade that share at any time. You feel that things are going well for you, or you've been there long enough, you want to exit, at least you have an exit. And I think that's the difficulty of coming in with cash into even a term sheet, and then you have one party and then another, and then you still haven't even got a formal VC round, and then you need more going forward. And at all times the valuations are obviously increasing, but still you are below the level of being able to list. I think having liquid stock in something tradable, a tradable instrument like listing, is very, very important. Also notice what Deputy Prime Minister mentioned about crowdfunding, for example, which is another source, by the way, very important to supplement this. I can tell you, for example, something I failed in. We were speaking earlier when you were not here that I made every possible mistake, and since I'm older than you, I made a lot more than you did. So one of the mistakes let me say attempt which didn't work, if you like. I thought when we were building the early part of our investments portfolio, of which anyway 10 were pure startups and the others were early stage. One of the ideas I was thinking with the first batch of them, I was saying, okay, each one do your business plan, but what if we can have each one benefit from the success of the other, which is a form, now I realize, not that different from what was being suggested, but not exactly that same structure, because we were going to use like a fund structure. And within it, of course, there was a management team for that particular part. And I was thinking if we can find a way that we can do this, and I couldn't find a way. I spent some time on it. It's not my skill, but I spoke to people that said it doesn't work, and I tried it, and I understood that it doesn't work. And now seeing someone that found a way of doing it is very impressive to me, because obviously that's for SMEs, which is easier than early stage, but still very, very crucial. And I'd like to see how that formulation works. This will be something very useful also, by the way, for the investment community, regardless who they are. Because for me, I don't look at it as angel or VC or whatever. I mean, because you can't just be an angel unless that's what you want to be. But you end up doing more than that in life. So incentives that can be provided, like this country gives a lot of incentives. So there are tax incentives, there are income tax incentives for the people working in the entities. If it's an R&D based effort, you can apply for a TUBITAC grant. You can also get loan if it's for supporting the growth of the entity. So there is some money source, but it's pre that level of being able to list. So here, this is a very interesting country in that regard. There's this commitment. If you notice also from what you heard today, how they try to give in the area which is good for the economy and good for you. And then, so this balancing act has really very impressed me since I first came here in 2005. And that's why I decided to invest, also because of the demographics, and all of these reasons. That's why in this, because I can only speak about this particular country where we want to test this CEO, I would like to try this thing with the CEOs and executives who are working in their companies and convince them to go to their boards to establish accelerator programs where they can tap on talent from people who are good at this type of thing. They can pay them a small fee to help them. The guys who are in this business can earn some money, because the people who are working and giving a lot should earn something. This way, all these people who are dedicated and have learned as well, instead of teaching the CEOs, too much. I would teach them enough to be able to get the money from them. But that would be sufficient. We don't need their skill because we need them to work in where they're working. And then get those to establish these accelerator programs so that the value to the economy would be obtained from corporate money. The corporate money should see this money as break even at best, which I think is sufficient for a company, because opportunistically they could be doing things which could have huge value if you hit the right one that is good for your company. So if you go for a break-even strategy, then the guys are incentivized. Don't do it yourself. Use experts from outside. Pay them part-time money. So you get huge value from their input. They earn some money. This is a way I would do it. In Telekom, they're doing it themselves, by the way. And also we provide mentor programs. So now they tell me, for example, I have to be a mentor on a number of the companies. They also do the same to various other executives. So I see in Telekom a working model that I have to say, was done by the management. It's not, but these are the people who are working with me in the beginning who saw this risk being taken. I'm very impressed. It can be a model, other people, but I would suggest don't do like Telekom, don't do it yourself. I mean, use outsiders to help you where you're doing. This is one area where a CEO can be helpful. And then in this, we motivate them to think differently at a time when they will leave, or they may say, one of the ideas that I really believe in, by the way, is that the best time to invest some money in angel is while you're working. It's much better because you have a job, you're earning. So you can put 50,000, 100,000 in something you believe in, and you don't need to mentor it too much. Yeah. This is another idea, because while you're working, you can afford that $50,000. When you leave, you're thinking in a different way. If you're earning X and all of a sudden X becomes zero, you will be more protective of the cash you're sitting on. So it's better to use them while they're in their jobs, because my impression after they leave, is that they would be dangerous when they have too much time. Because one of the other gentlemen also indicated that CEOs are not possibly good angel investors when they start believing that these companies are their babies to manage. But in reality, they cannot be. And I think that's the danger also of CEOs who tend to think that they can manage anything. And from experience, I can tell you that most CEOs cannot manage more than what is exactly defined for them. Yeah. But if you don't define it, most CEOs, by the way, are not good CEOs if the board doesn't tell them what they want exactly from them. If you leave it to them, they tend to fail, because that's also unfair, because they need to be given a very clear target and deliver on it. And such type of thing you're discussing here, if we can motivate just to get a break even out of it, I think that would be a good thing you and I can work on. And I'm willing to give you time on that, to go and market this idea, and that the government will support us in this, because we're not asking anything from them either. They're already providing the incentives. This is something that I'm willing to help with.
Thank you. Thank you. I want to make a short survey, because I want to understand what you think about this idea. Governments accredit business angels, while UK, US, Turkey, all of them, while they accredit the angel investors, they ask some documents. Let's say my grandmother, who received $100 million after my grandfather died as a wealth heritage. She is 95 years old and she has $100 million. But she doesn't have a network, she doesn't know how to launch a business, she knows nothing about business, but she has money. Unfortunately, my grandmother can very easily be accredited as angel investor, even she is in US, in UK, or in Turkey. This is the case. And her name is in the accredited angel investors lists, and startups check these lists, isn't it? And startups will go and find her for investment as an angel. This is what governments do. So let's not stop what governments do, because instead of making a critics about what they do, let's provide a solution for them. And not the solution should not also consume their time. The solution WBAF wants to put is, WBAF will start organizing qualified angel investor certification programs with a final exam. The ones who pass this final exam will be qualified angel investor, not the ones who put money. If he he doesn't have enough resources to invest, he can find it. But if he doesn't have know-how, he cannot find it the next morning. Sorry, there's a great difference. So we certify them. They use two certificates. The government certificate to benefit from tax incentives, and WBAF qualified business angel certificate, which shows they are qualified angel investors. They know what due diligence is. They know how to prepare term sheet. This is in our mind, and this is what we want to do globally. And the first certificate program will be with a final exam at the London Stock Exchange Group on the 10th and 11th of April. We will try the first one shortly. When we understand it is working well, we will expand this program globally to Johannesburg Stock Exchange, Shanghai, etc. So, what do you think about this? Does it work? Who thinks it works? Two people. Others think it doesn't work. Why, Panos, it doesn't work?
I said we make good, but it needs a good. In my view, okay, because this is another hat that I have, education. Education, you have to set up very well what are the skills.
Okay, we did it. We did the curriculum is perfect, trainer is perfect, final is perfect.
Okay.
But does it work?
I think it will work, but it's not clear very much what is the business model. If just you have a certificate, not anymore even having a PhD or master's degree in the near future, it will count. You know, so that's why education goes. Education, from my side, I would say that is global. It has to totally reform. So if we give it just a certificate, and we have to link it with something that will give added value, that one I have to think and come back to you. But in principle, I say yes, we need it because WEF gives, you know, a status. With all these people that are here, they give the status, not
yes.
only the WEF.
But the government also gives the status.
Yes. Yes, but government, as you know, okay, we need them, but if we have government, usually they create problems, okay? Mm-hmm. So this is the case. We need less government and more initiatives like this in order to go forward.
Okay.
So that's my view.
Okay. Okay. Is there anyone who has a very objection to this idea? Anyone who has the objection? Nobody. Some say, yes, this means we have to think about it because the result of this survey is positive from my side, by the way, isn't it, Paul?
Actually, look, I'll tell you, I mean, the reason, my understanding of the reason why certification for high-risk investments is provided is generally to protect people from risks that they may not understand, especially people who do not have money. So if someone has, for example, only $100,000 in the bank and then gets excited over an angel investment, that's why they put certain level of how much money you have in the bank, what's your net worth, what's your income. These are some criteria. The example you gave, if someone has any money, by the way, even $100 million of the person you described, for example, this hypothetical person, what's stopping that person going and buying any stock or going into a place where gambling is legal and gambling all that money away?
Yeah.
It's not illegal. So therefore, taking risk is not the issue. That's a decision of the person taking it. But if you buy shares in a stock company, a listed company, that company provides, I mean, it has disclosure obligations. Their accounts are published. It's a going concern, so the risk of total failure is obviously not as, I mean, shouldn't be as high as a startup, to say the least, you see? So therefore, the government, it's not the government business to regulate that. When government are putting regulations, it is generally of this kind. It is generally to protect people from investing in things they don't understand. For example, some people are buying, let's say, you know, bitcoins with limited money. They're making money from that. I mean, I know many people making money from that, and I'm happy for them that this is an opportunity for, it's a kind of like crowdfunding. I mean, in a way that this is for the small investor, which is a kind of like gray, unregulated area. If it works, I'm very happy for those that it works for, and I think this is an exciting opportunity in the sense that it allows people without money to take risk. because you can't invest $5,000 on the stock exchange. It's just meaningless. You see what I mean? So I think that is an exciting area. Let me say that. Same thing, crowdfunding. If
Early stage.
And they're trying to regulate crowdfunding too, by the way, so that they have a way that allows people not to be carried away and just putting money without understanding what they're doing. So crowdfunding is also a good way for money to come from the people who don't have necessarily money, meaning high net worth people. Maybe they have some money in the bank and they want to be part of this risk taking. If that's what they want, then it is good for society to encourage it if it's done in a responsible manner where they're not going to be cheated. So governments tend to protect, not to, let me say, create the opportunity. But here today you heard what is being done to create opportunities, such as lowering taxes, like you've always said, except I remember you telling me once that you went to Bahrain and you told them in Bahrain that there's a great advantage, and they told you, but we don't have any tax here anyway.
Yeah. This is what happened in his event. He had invited, Dr. Hashim organized an event in Bahrain, World Investors the Forum, and I was a speaker, and I prepared a speech about tax incentives. It was my first time in Bahrain, and I didn't know that the tax in Bahrain was 0. So we are always announcing Turkey is the highest, 75%, etc. They are not paying tax there, so it is organically a tax incentive country.
You remember in the same meeting, you and I were talking, and then you were insisting on asking whether Trump will support the way Obama supported the Angel Investment Initiative. And I think you've just been to India, I think it was, or something. You decided that Istanbul will be the next destination, and you were insistent on that question, and I was trying to be polite in my answer as much as I can, because that was published in the article. And I was also wondering, why you thought that was important, thinking that, obviously you're not expecting much from the US. But what I didn't write in the article, I can tell you now, because now that we know that Trump has been, we've seen what he is. What we wrote there was that we said that, okay, so Obama was excited about the idea and said that this should be global and that the US will support, and it didn't take him long. Why is that? Because what kind of a person is he? He's a giver. He gives to get. He's not a like a selfish business type person that says, what can I get out of you? He's the other kind. Okay? Yes. Now, I'm not saying that he's a good person or a bad person. I'm just saying that he's of that kind. He would give you first before he wants something. So he saw this is good. Donald Trump is coming more from real estate, business mind. Yes. So he's a very hard businessman. He's a person that drives the greed part. So he's closer to the high end of the investors, I was saying, like you have the angel and the venture and the above. And those people are harder because they're sitting on big money. When you have big money, the one who needs money, big money, you are in a much stronger position to negotiate, such as you're a bank or a mezzanine structure or something. So you're in a stronger position to negotiate, and that's your job because, by the way, that money isn't yours. You're managing other people's money, and again, that's responsible. So I was saying to you that he is entrepreneurial, but he would probably, he would have no reason not to support, for example. But I'm saying this to you, by the way, because leaderships matter. Like Europe, for example, also understood that Europe needs to do something. And Europe have been doing many things. I'm seeing also UK, major developments in that market. A lot of new startups are starting up there. Other parts of Europe, Germany, some new things. Even recently I was very happy to see that Deutsche Telekom decided to invest, for example, in a glass technology company. Just 2-3 weeks ago. I'm very happy to see that. That's the trend, you see, why we should focus on people who are in a controlling position, but he's an employee. Don't ask for his money. Ask for his influence on his own owners to help us build up this thing.
Thank you, Paul Bey. And Renata, your last words. Do you have any last words to add? A few words, please.
Excuse me? In few words?
Yes.
I was really happy to see the gender lens balance in the Congress. This is very important, and it is very visible in the past 3 years that the WBNF is developing. And I was also very happy to see the Take Invest Summit taking place, and the startups all being very innovative and all being very much impactful ideas. pursuing. So there is somehow we witness this situation that startups or scale-up pitching for money don't come if they already didn't have the impact agenda developed. It has become now on. And
Thank you.
That's, I mean,
Thank you.
fine.
Dear Paul Bey, a few words.
I wish you the best of
Thank you.
and energy.
Thank you. Thank you.
Get some sleep because you know.
Thank you. Yeah, this is what. Ladies and gentlemen, I am now ending this session, plenary session, and now I am inviting the chairman of the World Business Angels Investment Forum, Baybars Altuntas, to give his keynote, to give his closing remarks.
Okay.